Hello everyone. This report covers the May 4 to May 8 trading week. This video focuses on the clearest examples from the weekly report, not the full operating table. And before we begin, this is not a buy or sell signal. It is a spike quality classification. The goal is not to rank stocks by the biggest percentage move. The goal is to ask a different question. Did the evidence rise with the price? Some stocks moved with stronger operating evidence. Others moved faster than the proof. That difference is the focus of this report. For the video summary, the higher evidence examples are Innodata, AAON, and Datadog. These moves were not just price reactions. Innodata showed strong revenue growth, stronger profitability, and a better full-year growth outlook. AAON showed strong revenue growth and a large backlog, helped by data center demand. Datadog had earnings strength, guidance support, and demand tied to AI observability and cloud security. This does not make any of them a buy signal. It simply means the price move had more business evidence behind it. For the follow-up required examples, the clearest cases are Rackspace, Fluence, and Atara. Rackspace moved sharply after an AI infrastructure headline and an AMD-related MOU. But the next test is whether that MOU becomes revenue, backlog, or margin. Fluence had strong backlog and hyperscaler-related interest, but backlog still has to convert into revenue, margin, and cash flow. Atara moved on a regulatory update, but a regulatory path is not the same as approval, commercialization, or revenue. These are not rejected names. They are wait and verify cases. This is the key distinction. Some moves were evidence-led, some were broadly aligned with the evidence, and some were price ahead. Price ahead does not mean the company is bad. It means the stock moved before the business proof was complete. That is why this framework separates price reaction from operating evidence. The question is not just what moved. The question is what was actually proven. The next step is follow-up. At T+1, the first question is simple. Did the move hold? At T+5, the question becomes more important. Did new evidence appear? And at T+20, the real test begins. Did revenue, backlog, margin, guidance, or cash flow catch up with the price? That is how we separate a developing setup from a short-term reaction. So for the May 4 to May 8 trading week, this video focused on the clearest examples. Innodata, AAON, and Datadog had stronger evidence behind the move. Rackspace, Fluence, and Atara need more confirmation. The full operating table includes more names, but the framework is the same. Did evidence rise with price? This is not investment advice. It is research priority and risk classification tracking. The next test is whether the evidence catches up with the price.